Welcome to Market Unlimited. My name's Matt, and today we're going to be talking about the energy sector. Over the past month, energy's had a broad rally that's exceeded the S&P 500. A lot of people are wondering if this is going to continue or if energy's best days are behind. For this video, we'll take a look at XLE, which is a sector-based ETF. We'll take a look at some fundamental and technical analysis, and then we'll see if we can figure out where this is going to take us. So if you guys are interested in this type of content, make sure you like, subscribe, and let's get started. To start off, let's go over what a sector-based ETF is. More or less, this is like an index fund, but it's primarily for one sector of the stock market. So there could be a fund for healthcare stocks, energy stocks, technology stocks. It's a way to kind of concentrate into one individual area by buying a basket of stocks instead of just buying one at a time. So, like an index fund, since it's made up of so many different things, if one company does bad, it doesn't necessarily drag everything else down. With this particular one, you'll see that there's a heavy weight in ExxonMobil, Chevron, and then as you go lower down the list, you'll get into some of the names that are lesser known below this, which isn't shown. You'll have small concentrations in small cap stocks, but they make up a minimal amount. So just wanted to give you guys an idea of what this is before we go any further. If you guys have any questions, feel free to leave comments. All right, thanks. When considering an investment, you want to take a look at the valuation of what you're buying. The idea is you want to make sure you're owning something that is undervalued overall. And with XLE, it's a little trickier than some other stocks. It's commodity based, meaning that some of this is going to depend upon the price of oil. If oil's higher, obviously oil companies are going to make a lot more money. If oil goes down a lot, they're going to make less money. So with that being said, we'll look at the current PE ratio of 8.63. What this means is that if you take the earnings cumulative and then you divide that into the share price, this is a metric that gives us a good idea of how much we're paying to buy this. Now, 8.63 is deep value territory. And to show you that, we're going to take a look at the S&P 500. So as you can see, the S&P overall is at 26.22. So we're looking at the energy sector roughly being one third of the valuation of the overall market, which is extremely good. As I mentioned, that can change depending upon the price of oil, but needless to say, there's definitely some wiggle room there. So valuation is definitely appealing with current market conditions. Now I want to take a look at some technical analysis. We'll start off taking a look at the moving averages. As you can see, there's a blue line and there's a red line. The blue line is going to represent the 50-day moving average, where the red line represents the 200-day moving average. Just this gives us a general idea as to the price of the stock in a shorter time frame versus a longer time frame. Every once in a while, you'll see these two cross. And if the blue line goes below the red line, that's referred to as a death cross, which is bearish. And as we can see, when it happened before, XLE had dropped in price. Now, the reason I'm bringing this up is because we're starting to see the opposite happen right now. The blue line for the 50-day moving average is about to overtake the red line, which is the 200-day moving average. And that's referred to as a golden cross, which you can see I noted on the chart. Typically, when this happens, it's a very bullish indicator and it's a sign that there's going to be a lot of positive price action with the stock or the ETF. So I'm interested in seeing how that plays out. Now, if we zoom out a little bit and we take a look at the weekly chart, there's something else that I want to bring to everybody's attention. As you can see by the channel that I outlined at the top at those peaks, over the past few years, there's been some rallies in the energy space, and XLE's topped out a few times in that area. Now, the reason that I'm bringing this up is because if it breaks above that area, that hasn't happened in an extremely long time. Usually, when that we call that resistance, when that's broken, that's also indicative that there's going to be a large run because it's a breakout. Now, it hasn't broke out at this point, but if we start adding a couple different things together, the fact that the golden cross is forming, which usually gives it a jolt. If it gives the jolt, it's already towards the top of that zone. It should break it above, which will give it another jolt. So it's kind of predicting how some dominoes will fall. Now, there is one thing that I believe to be bearish, um, possibly near term, where we could see a pullback. As you can see at the bottom, the RSI chart, which more or less just tracks momentum to see if things are getting a bit overbought or oversold, is starting to break out of the channel to the upside. So we already know that there's been a pretty large run in energy. And, usually when that happens, people are going to step in, take profit. There may be a short term pullback. That's okay. I'm just putting that out there because obviously it's running a bit hotter than it has been in recent memory. So if we start to see a pullback, that's not necessarily a reason to run for the fences or anything like that. It's just something to be aware of. The blue line that I wrote on the chart, that's the trend line. And as we can see, there's a lot of space between where the current price is and where that trend line is. So even with a moderate sized pullback, it doesn't necessarily mean that things are flipping bearish at this point. So, there's a few things that we have to keep an eye on, but overall, there's a lot of positive developments in the works, but near term, we might see a quick pullback just because things have ran so hard so fast. So wrapping it all up, what do we know? As of right now, everything looks good from a valuation standpoint. Obviously, the price of oil itself can change that a little bit, but as mentioned before, we have some wiggle room just due to the difference between the valuation between the broader market and the energy sector. As far as the technicals go, it's overall looking pretty bullish to me. Obviously, we have to keep an eye on a few things. The main thing would be just the immediate term with maybe it pulling back slightly, high 80s, I would say, or it could even trade sideways just to, cool off the RSI a little bit. The main thing I would say is whether it breaks above that resistance level. If we see that start to happen, then that would be a sign that we're going to see another leg up and there's going to be another huge run. So if I was to score everything, I would say valuation, we're going to give it an A. And I would say from technicals, we'll give it about, a B to a B plus right now. Overall, I would rate this as a buy. Now, we could keep an eye for maybe a slightly better entry point on a pullback. But ultimately, I like the Golden Cross. I like where it's positioned just as far as price goes. And, I'm excited about it. So you guys let me know what you think in the comments and like and subscribe if you want to see more of these type of videos and content. And until next time.